Talking about stocks that are buzzing around, let's get straight to our special segment, the outperformers of 2017, where we'll be getting you companies that have been star performers in 2017. Puravankara, that's one such company that's been buzzing around. It's up close to 300% in this year. Now, the key aspects that we aim to focus on are the geographic breakup, the affordable housing segment, everyone's talking about that, the realizations, what are they currently, and what will they be going ahead? In fact, what are the current debt levels the company is sitting on, as well as what are the inventory levels that the company has? To discuss this and more, we're joined by Mr. Ashish Puravankara, the MD of the company. Hi, Mr. Puravankara. Thanks so much, sir, for joining us on the show. Well, people perceive you more as a South-based player with some exposure in the West. Do you plan on reducing this dependence on South India?
Unfortunately, human memory is very short. So I should clarify that we were a company that started out in Mumbai. Yes, of course, moved to the South. Focus was moved to the South very long time ago. So today, currently, in terms of percentage breakup between South and the rest of the country, South would account for about 90%. So we are present in every key market in the South today, which is Bangalore, Hyderabad, Cochin, Coimbatore, Mangalore, etc. We are also today present in Pune. We have done more acquisitions, so you should see launches over the next year in Pune. We also have projects coming up in Mumbai. So the percentage which currently stands at 90%, I think, which is South-focused, should come down to about maybe, I would imagine, about 75 to 80%.
Okay. The scope for affordable housing segment, how much do you think is the scope, and what proportion of sales have already come in from that segment? Will that number change?
We see a tremendous potential in the affordable housing space. We were one of the very few developers who had set up a Provident Housing, which focuses on affordable housing way back in 2007, had our first launch in 2009. Since then, we've launched over 14 odd million square feet. We have an exciting launch pipeline of about 10 million square feet, 10.3 odd million square feet over the next 12 to 15 months. Currently, in terms of the sales breakup between Puravankara and Provident, Puravankara still accounts for about 56% of sales. Provident accounts for about 44% of sales. But obviously, logically, as these new launches come out, the percentage of sale of Provident would increase over the next 2 to 3 years.
All right, let's take that point forward then. What are the current realizations? And if affordable sales will increase from year on, your blended realizations should dip, isn't it?
So the realization for Puravankara currently is in the range of about 6,500 rupees a square foot. The average for Provident currently stands at around 4,200 rupees a square foot. And like I mentioned earlier today, the percentage mix, Provident contributes about 44% and Puravankara is about 56%. Both realizations are growing steadily individually, but obviously as the new launches come in and as the Provident square footage goes higher, you're going to see that realization, the blended average may stay flat, but that's not the right way one should look at it. They should look at independent realizations for both the brands.
But Ashish, with this thrust on expansion and affordable housing, don't you think your debt will increase?
So currently, on account of securing new projects in the West, the debt number should not go up significantly. It may go up a little bit on account of securing construction finance for our new launches. But having said that, we also have our ready-to-move-in inventory, which has started selling well. We've seen steady sales there, which will ensure that there's healthy cash flows to keep that debt number in check. On the equity front, currently, yes, we hold about 75%, and there's no immediate plans of diluting that to raise any capital.
All right, but what about the inventory levels, and what about inventory conversion cycle? If you could throw some light on that part.
Most of our ongoing projects have been selling well, so you don't see large inventory build-up that's happening there. Yes, over the last 3-4 years, we had very large projects that we had launched that were nearing completion, where we had some amount of inventory. But if you track our sales over the last year and a half, the ready-to-move-in inventory has been the flavor and has started selling well. So if you see, for example, last quarter, the completed and near completion projects accounted for almost, I would say, 55% of our sale. So we are seeing that sales pick up, which is a very healthy sign.
Okay. Thank you, Ashish Puravankara, for joining us with that wealth of information on Puravankara. We must pull up the 1 year of that stock. That is the reason why we called Ashish, and that's more than a 300% rise in the stock. Outperformers of 2017, that is, of course, Nigel's presentation in this last week of 2017. We take a break on that note.